Guys, welcome back to Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. If this is your first time here, welcome. Take a look around. Today we're talking about should you sell a stock? I want to visually, not physically, I want to visually talk about strategies. I want to visually show you how you can make that determination if the stock you're holding is worth holding, and talk through some scenarios because a lot of people, and I mean a lot of people, here are the lot of people I'm talking about. It happens often where I am scrolling on Twitter or stock twits and I see, should I sell this stock? I'm holding a bag, the price has gone down, um, whatever. They had a bad earnings call, they delayed a product, a service is going away, or they spent a bunch of money on a sales team and now they're losing money temporarily. So many reasons. So yeah, let's look at first strategies, then we'll look at a visual way how you can determine if you should sell a stock or not. Let's go. All right, so there are a few strategies that I think we can benefit from talking about. The first one is going to be a long-term investor. And this person is someone who buys and holds for 6 months to over 1 year, sometimes over 1 year to 5 years. Um, so there is a long-term investor. There is a swing trader. This is someone who will buy a stock typically for about a week to a few months or a few months to a year. Um, Having a plan is required for both of these strategies because you want to make sure you're buying to hold and get profits. And there is a benefit to holding over a year. You get the long-term capital gains, which is amazing, by the way. And then you have your day trader. And this person, just like it says, buys for a couple days, maybe 1 day, 2 day, and then they flip the stock for a profit or loss. And there is the intraday trader. And the intraday trader is someone who will buy the stock and sell the stock within the day. They don't hold the stock. They have commitment issues. I'm just kidding. No, they just have the liquid cash on hand at all times, basically, to continue to invest into assets. So a long-term investor um, typically would not be someone who would be concerned about um, if they should sell a stock because they have a plan. They have a plan A, plan B, plan C. Let's say the CEO quits. Let's say the company dives because a scandal, um, etc. Like they have the worst case and best case scenario, basically. I would think if the company were to um, hit that worst case scenario of no longer being what it was projected to be, that's when I think a long-term investor would sell. Let's say Uber was intended to be like how it is, a taxi company, cars, etc. Let's say the US tomorrow just says no more Uber. Long-term investors are going to get out because you can only drive taxi, there's no more Ubers. So things change. The swing trader, now this person is someone who I consider myself swing trading in long term. If you're holding a stock and it's going negative or you're starting to lose value, remind yourself why you got in the stock. We'll look at the visual facts of the company. But again, if things change materially and definitively, that's when you want to get out, whether you're long term or intraday. Let's say you bought a stock, you bought Apple because it's just a normal day. But then tomorrow, Apple's like, we're actually just going to sell the business and it's going to be just iPhones or iPods, whatever. That would be something you'd be like, no, this is insane. I don't want to invest in that. So um, these are the types of strategies. If you're more of the swing trader and long term investor, I think you're more confident in what you're holding because, if a stock goes down, usually if it's if you know the stock, you know the price, the fundamentals, services, products in and out, you feel good when it goes down because you can add more. Um, and then you have those uh, financial data points you can look at to see if things have materially or definitively changed. So I gave you those few examples, but what if, let's say, the CEO is going down the wrong path? You give it a quarter, you give it 2 quarters, and the CEO is finally like, yeah, we're gonna go from being a digital company, we're going back on paper. That's and you had an inclination, but you didn't really have definitive proof. Those are things to also look out for on paper. So we've talked about strategies. Now let's talk about where we can visually see if a stock is worth holding or worth selling. All right, so I am showing you guys FinViz right now on my screen. This is the most powerful site in the world. It can change your life. Finviz.com. Do it on your laptop, do it on your desktop. Doesn't really work well on your phone, but you still can navigate. So I just went to the screener portion and we're just going to click on the first stock in the stock market, which is ticker symbol A. I don't know about this company, but let's just look at it. So this is where you can go. You got to type in your ticker symbol up here. I just used A, but maybe you're holding an oil stock. Maybe you're holding a marijuana stock. Maybe you're holding a drug stock. Maybe you're holding a solar stock. Maybe you're holding apparel, retail, movie theater, shoes, coats, cell phone, whatever. So just type in the whatever company it is, type in the ticker symbol, and this is going to be the most crucial part. You want to look at the sales right here, and you also want to look at the income. Now, if the income is negative and dwarfs the sales, that is not good. Um, that means that they're making money, but they're also not net income positive. So basically, this company, it's Agilent Technologies, ticker symbol A. They have $6.93 billion in sales. They also make $1.32 billion in income. This company sounds awesome. They pay a dividend because they make so much money. They're profitable. So this is actually a good example. I wasn't sure if I would get a good example or not. Let's look at a bad example, which is like more than half. So let's just look at Nikola. So let's say you're holding Nikola because you were excited about the company. Um, so Nikola is $1.50. You can see right here. Let me zoom in actually for you. Here we go. So Nikola, ticker symbol NKLA, they make 50 million. Nice, very nice. But they're losing 784 million. That is a prime example of when you would want to cut the cord. You want to probably take losses and get out, unless the company is turning the ship around. Um, but I mean, that's 100x of, okay, 10x. That's 10x negative of their stock. And you can see that they have debt right here. So let's go down and look at their debt. So the total debt is 354 million. So not only do they lose 754 million when they make 50 million, but they're also 354 million dollars in debt. That is insane, you guys. So again, use these metrics. Look at their assets, look at their liabilities. This one, there's 1.2 billion in assets, 710 million in liabilities, but always, always, always look at the debt, look at um, their gross profit negative. They're paying $155 million to make $50 million. It just does not add up. So if you're asking yourself, should you sell ABC123 stock, review the company. Is it a good company? Did you follow somebody online, someone from Twitter or CNBC, Wall Street Bets, StockTwits? If you follow anybody at any time, you're already too late because you're hearing about it and they're exiting as you're getting in. So my channel teaches you how to find your own stocks. So you can find these on your own. You don't have to rely on anybody to find a stock that is about to move. Check out my videos, subscribe to my channel, like this video. Um, yeah. Um, so as I was saying, just come back here, finviz.com, look at the sales, look at the income, check out the debt, um, look and see if it's profitable over here. Look at their gross margins, look at their sales over the past 5 years, look at their earnings per share over the past 5 years. These are going to tell you if the company has been performing historically well over the past 5 years. Look at their earnings per share this year because they're going off of guided numbers. Look at their earnings per share next year. Are they guiding for positive EPS next year? Look and see if insiders are selling. Look and see if institutions are selling. Look how many shares are float, because if there's a billion shares and they make $10 million a year, that's $10 million distributed over billion shares plus. I mean, it doesn't make sense. So just make sure you have your ducks in a row. This is going to let you know if you should buy or sell. You can also look at the charts and, um, maybe there's a pattern about to play out, but again, see if it makes sense first. If it doesn't make sense on paper, it might not make sense, technically speaking, on the chart. Um, so with that, guys, I hope I was able to help you determine if you should sell or not. Um, Always do your own research, and I hope you are doing well. Have a great day or night. Bye.